Thank you so much, everyone. I think Sharon set it up really well, starting with talking about funding. And here I think we're going to get some really interesting perspectives on how startups should think scaling up. Just to set the stage, I'd love to get everybody's perspective, just maybe 60, 90 seconds. Divya, we can start with you. What are some of the evolving, consumer patterns, behaviors you've been seeing, recently, and trends you see coming up?
Thanks, Anju. Hi, I'm a part of Stride Ventures. We are a venture debt fund. I just thought I'll just give a quick introduction there. So we are a sector-agnostic fund, but very actively, we've looked at the D2C space. In terms of key emerging themes, if we were to see, we do see in terms of sector per se, health and wellness as a segment in different pockets have played out really well. We do have a couple of companies in this space, but in terms of key themes that have sort of emerged, companies which are sort of focused on personalization or customization, because product innovation is clearly key in this particular segment, and that's how you sort of differentiate yourself, right? So for instance, in the BPC segment, the beauty wellness segment, if you were to see, while there are a lot of startups that have sprung up, the space does seem a little cluttered, but there have been companies which have differentiated themselves either basis their product offering in terms of how they've curated their products, and they've stood out. So that's one segment. So customization and how do you deal with product innovation, that's been key. How do you build brand loyalty? Again, that's an important thing. We have another company called Yoga Bar. They've really played out well in terms of how they've become synonymous with in terms of quality and the trust that they've built. So product innovation, customer retention, how is it that you play out on these things? These have been the key factors that we have looked at, and health and wellness per se across different pockets, be it beauty and BPC segment, or in terms of healthy food, snacks, etc. We've seen a lot of companies come up, and that's where we've been bullish about, yeah.
Harsh?
Hi, I'm Khara. I'm a vice president at Sorin Investments. We're a Series A and B focused venture capital fund, $160 million in total. New fund, new to the ecosystem, but actively looking to deploy. To answer your question, Anju, I think one trend or theme that we see very clearly is premiumization. We think that there are potential opportunities that are maybe going to play out along premiumization. I think so that's glaring us straight away. I agree on health and wellness. I think that is becoming increasingly important, and you're seeing a few opportunities coming up there. There are two other areas. I think these aren't like sectors or segments, but just nature of business that's kind of evolved, especially given the year that has been for a lot of companies. One's, I think, much more sensibility around unit economics playing out. It's not growth at all costs anymore, which is definitely a healthy sign. And the second domain really is around, founder, like I think readiness, awareness, right? You're seeing far more sophisticated founders today, like trying to start up and build businesses. Or even, founders that had bootstrapped businesses for a while to a reasonable size and scale, go out into the market and try to raise capital, right? Now, these are companies that are probably doing more than 50 odd crores of revenue, have been profitable till now, have a fairly large chunk online as well, right? So that's encouraging to see. But I think those are just a few overall trends plus themes, if I can summarize it as that we are seeing and we're excited about.
Prayag?
I think, so just for an introduction, I'm Prayag. I'm part of the investment team at Fireside Ventures. We primarily focus on investing in consumer brands. Brands could be product companies or service companies. In terms of how we look at consumption themes, we look at mega trends, which are playing out. I think as some of my panelists mentioned, something like, premiumization, aspiration is a clear trend which we see playing across segments. It could be FMCG, it could be a lifestyle, it could be apparel, it could be across segments. So we look at playing some of those trends out. The other trend which we see, the big trend, especially post-COVID, is around the entire DIY self-care kind of trends, which has obviously been big in segments like Nutra, but we are seeing that in a lot of other segments also. Again, another trend which we are seeing increasingly is something around conscious consumption. The consumer is very conscious in terms of what they are consuming, whether it's an ingestible product or an application product. And again, it traverses across segments, whether you talk about food, whether you talk about BPC, or it talk about in terms of what kind of apples they are buying. And several. So I think the way we look to play out trends is more around mega trends rather than putting a sector lens on it. And see, and typically what we see trends impact multiple spaces and we look to play them across different segments.
Arjun, your thoughts?
Yeah, hi guys, my name's Arjun. I was a founder till very recently, ran a Ayurvedic products company called Dr. Vaidya's, which I sold in 21 and then now set up a VC fund called V3 Ventures, investing in early stage consumer. I'll sort of take off what Prayag said, and I won't talk about sectors, I'll talk about more evolution of the consumer. So I came back to India in 2013, started operating my business in 2016, and obviously in the last 7 years, the world has changed, right? So I'll tell you maybe through some anecdotes, things that have changed, right? So my parents were parents of an e-commerce entrepreneur, but they had never placed an order online until 2020. My dad's now placed like hundreds of orders on Amazon. I recently saw him call the customer care of a D2C brand and say, hey, I'm in Bombay, you're in Bombay, it's taken 4 days, you've not delivered the product yet. What's happening? It doesn't take so long to deliver, right? So I think broadly we have seen coming out of COVID, a whole new set of consumers who had never shopped our new age brands, our D2C brands, our online brands come into this world, right? With that, we have also seen that this concept or notion of creation of brand has become very exciting. And so lots of brands have entered spaces, right? So I teach a D2C cohort on the weekends. I've had more than 1,000 founders take it. 100 of them have been D2C Ayurveda brands. When I started in 2016, there were no Ayurveda brands trying to do things online, right? So in each of the spaces, you're also seeing some more amount of sort of competition and some more amount of sort of clutter, and then brands really have to find ways to break through. I think consumers have also understood that they can demand a high quality experience, right? And so if it takes you more than 3 days or 4 days to deliver a metro, it's a problem. If you have a bad experience with a brand, you will talk about it on your Instagram. If the brand doesn't reply to you, you will get pissed off. If a customer's not got an order, he or she commented on every single LinkedIn post I've ever put in my life until my team sort of resolved the query, right? Now, I'm giving you exaggerated examples, but I'm saying that consumers are now used to a heightened consumer experience. And so brands are able to offer this, what we call consumer delight will win. And I think the last thing which I have noticed, as VCs, we keep saying this word TAM, and founders are confused what this is. And it's size of market, right? But earlier we were all looking at these large market opportunities where there's really, really, really big, what we thought TAM opportunities, right? Over the last 2 or 3 years, we're seeing founders build in niche spaces. We talked about premiumization, but also sort of subcategories in big categories like personal care, and are able to build very large businesses. That comes from the fact that consumers are trying new things, but also the size of our country, right? And so I think even niche brands now can get to the 100, 200, 300 crore scale. So I think those are the few consumer trends that I've been spotting.
Great, thanks so much. So Prayag, let me start with you, just taking off on something Arjun said. Typically large brands tend to focus on, tier 1 cities, but now the bulk of the consumer market demand is coming from tier 2, tier 3 cities. As startups are scaling up, how are you seeing them address the needs in these tier 2, 3 cities, consumers?
Sure. I think we are seeing startup address these needs at various levels. I think the first level is, of course, building the infrastructure for these markets. Like even the larger e-com players might take 4 to 5 days or even sometimes longer to service it. So we're seeing a lot of startups come up, where they are building the infrastructure, the digital infrastructure and the physical infrastructure to actually deliver products to these consumers. From a brand's perspective, I think, or from a consumer's perspective, honestly speaking, the aspiration of what we call India 2, which is mostly residing in tier 2, tier 3, is not very different from a tier 1 or a metro consumer. It's not like, you can give them a product where the quality is not at par with some an aspirational brand per se. So clearly there is a VFM perspective there where consumer is looking for a lot of value, but doesn't mean that you can compromise on the functionality aspect. Like we do see some brands, offering a similar functionality at maybe a lower price point, maybe, pulling down a bit on the sensorials. But clearly that consumer also wants a product which is equally good to, what a tier 1 consumer or India 1 consumer is consuming. And we are seeing a lot of brands come up with those kind of propositions targeted more at the India 2 market, which is also there in the metros tier 1, but maybe more in tier 2 and tier 3. So that's typically how at least we are seeing brands address this emerging TG.
Anything you would add to that, Arjun?
Yeah, I think this is my favorite topic. I built a business which was 82% outside top 10 cities. And I learned a lot about consumer behavior, and also that consumer behavior is very different from my behavior, right? So I remember launching a weight loss product at Dr. Vaidya's and thinking it would do really well. All the comments on the weight loss product were, give us a weight gain product. When we launched weight gain, it sold 4x of weight loss, right? So I think, as Prayag said, there is a huge opportunity. There is also maybe lesser access to offline retail for the brands that we may have access to in a Bombay, Delhi, Bangalore, Hyderabad, Chennai. And so 11%, 12% of our sales at Dr. Vaidya's came from the Northeast. And so I actually actively spend time there. But let's sort of move aside from the brand consumption lens, also talk about something I've been seeing off late, which is really exciting and really interesting as well. You're also seeing some outstanding businesses being built from the Ahmedabads, Jaipurs, Surats, Indores, Jhansis of the world. I spend a lot of time going to these places, meeting founders. And I think there was that sort of initial feeling when I went to Jhansi recently to meet a founder. And I said, dude, so you'll raise your Series A and you'll move to Bangalore or Bombay. And I spent time there. Actually, I think there is so much advantage of, there is obviously some amount of disadvantage, but so much advantage of being in these cities and building from there. There's less distraction, less attrition, focus more on business, lower costs, more time you have on your hands. So I think other than huge amount of consumption coming from India 2, tier 3, as you may call it, there will also be a huge amount of brands being built. Those brands, honestly, I've seen understand profitability a little bit better than we do, but also maybe understand the consumer in those markets better than us. And so I'm really excited for even the investing opportunity for us as investors in these markets.
Nice. So Harsh, let me ask you the next question. A big part of the success of any startup is the people and the talent. It's also one of the key challenges. So how should founders think about growing their team, or what they should think about in terms of hiring talent as they are looking to scale up?
I think at the early stage, a lot of times founders try to do everything themselves, right? And I think that is a mistake. Beyond a particular stage, and you should be able to decipher, right? Like, where are your weaknesses? Where are your co-founders' weaknesses? Are you not good at finance? Are you not good at marketing? Is supply chain your struggle? Is technology the challenge, right? And try to get people who are complementary to that skill set, right? And I personally believe that always try to hire people who are smarter than you, right? So bring on board talent that can truly make a difference. And be generous. Like, I would advocate being generous in terms of at least ownership at an early stage. There's actually an entire global movement going around called Ownership Works, right? It's more for private equity type or backed businesses. But the entire logic there is, right, make everyone an owner of the business, not an employee, or try to, right, at least. And I think all the more important to do so, and being generous about it at an early stage. You'll see a lot more commitment and passion in most cases from those employees, right? So I think to summarize, hire folks who have complementary skill sets to you. Try to hire folks who are smarter than you. And third, be generous in terms of at least how you onboard such folks, right? And some of this ties into also trying to build a much stronger culture from day one or at the earlier stage when you're there, because then, it'll lead to lesser attrition, it'll lead to more commitment, it'll lead to more ownership, and it's a bumpy ride, right? So you need these kind of people to like truly be loyal and be around and help build out your business.
So Divya, adding to what Harsh just said, again, a challenge is, the culture of a startup significantly changed the minute they scale. So any advice for founders there, how they should deal with that, what they should do to prepare for that as they kind of grow their teams?
Yeah, probably just adding on to what Harsh said, in terms of at least teams, I think early on, in terms of when you're acquiring customers, it's a very data-led approach. So having probably a good data analytics team in terms of understanding how your customers are behaving, what are their preferences. That is sort of important. And also, I think the whole customer experience has to be so good. So a decent tech team sort of becomes important. Culturally, of course, it's what the founder sort of sets in. An entrepreneurial mindset is required if people are joining a startup. So that is, from a cultural standpoint, that is definitely a requirement. I'll give you an example in terms of why it is important to hire. We have seen a company, great product in terms of what they had to offer, and again, a large market opportunity as well in the feminine hygiene care space. But they were wanting to expand into the offline space, given the lack of a good distribution or a sales team. They were unable to scale. In fact, they were doing really well, and they sort of came down because of the fact that they really didn't have a good sales or a distribution heading the system. So I think it's very, very important for companies and founders to invest in the right set of people, having that entrepreneurial mindset in them, if they really want to scale in a big way. Yeah.
Great, thanks. Let's continue building up on that, omni-channel. So a lot of businesses we've seen are going from kind of online to offline. So Prayag, let me ask you, what is there a right time? How should a founder think about what is the right time I should now go expand offline? And what are some of the challenges you've seen founders face in this?
So at least how we look at it is, I think when you go offline, the way the model should work is there should be a pull from the consumers as against a push by the distributor and the retailer for your product in the channel. And we mostly invest in brands which are primarily digital first, but eventually, as Anju said, they have to go omni-channel for scale. And the way we look at it is you build your brand equity online through online channels, whether it is leveraging the different social media platforms or even the marketplaces. You get to a certain scale, you build your brand equity with the consumer. And there are ways to measure that. There are different agencies who can do a brand track, who can tell you what kind of consumer awareness, resonance, recall is there. As and when you feel that's strong enough, that there is enough recall with the consumers, is the time you actually start going offline, because it's important that that brand equity is there for you to actually have the pull in the offline channel at the point of sale. So I think that's typically how we look at it. Most of our portfolio companies would be doing regular brand tracks, and as and when we feel that brand equity is there at the point of sale is when we advise them and they decide to definitely and go offline at that point in time. The challenges could be if you go, I think the one challenge is how do you plan in parallel, right? Because it's a bit of a chicken and egg. You are looking at, let's say, you have onboarded some celebrity, you are doing some brand campaigns, you're creating awareness, but you also want to tap into it. You don't want to lose that consumer at the point of sale where the awareness is there. But at the same time, you don't want to go too early. You put your products, it comes back after 6 months because that awareness wasn't there at the point of sale. So I think that's a bit tricky. How do you plan it in parallel? That's where, the timing can go a bit off. But in general, I think a good way to look at it is keep measuring your brand equity with the consumers. When you feel it's strong enough, that's the time you go offline. And, that's when we've seen the best of our brands see that throughput, and the sale in that channel.
So Arjun, what are some of the challenges, typical challenges you see companies face while scaling up? And, what are the questions you think a founder needs to ask himself or herself to answer, in terms of how they scale. Lots of decisions along the way. So love to hear your thoughts
Yeah, I
on
think it's
that.
a very, very hard question. And having been through some amount of that journey, I think everything breaks, right? I think fundamentally in the world that we live in, the startup world, uh, while lots is being said about the world from the outside, we are basically breaking barriers and changing the goalposts, right? I remember when I started, 100 crore was like this sort of scary number that we would kind of say but not say, and it was like this mythical being that, one day 100 crore. Now it's just so amazing to see founders just talk about this number like it can happen anytime, and what used to take 20 years and 30 years is now taking 3 years and 4 years, right? So I think we're solving what used to take a lot of time in very little time, and given that, a lot of things can break, right? I think you got to be very mindful of maintaining the culture in your team while still understanding that at different scales of your company, there will be different kind of people that you'll need in your company. You'll have to take the people who you started with along with you, but there will be subject matter experts, there will be departments. You will not be able to yell across a room and get to everybody. Eventually, there will be teams, there will be sort of separate stand-ups for different teams in the organization. I think as a brand grows as well, or a company grows in terms of revenue, the brand needs to grow along with the company as well. A lot of times I see brands are much bigger than businesses, and then in cases like mine, the business was much bigger than the brand because you just build on performance marketing, right? And that's an error that I made as I was building. I got away with it because the times were different, but I think building both together is also really important. And the third thing is, I think Prayag touched on this. Look, it's very tempting, especially in consumer businesses. There are lots of channels available to you, right? There is online across marketplaces on your own website. Then there is offline across GT and MT. Then there's an institutional channel. Then there is an export channel. All of these channels, when your brand starts doing well, people will hound you from these channels. Now, I can tell you about the export channel. I had across my 4.5 years, maybe 250 export inquiries at Dr. Vaidya's. 2 converted. It was a massive waste of my time. Just a massive waste of my time, right? So I think deciding where to go when, and by the way, each channel has enough depth, right? So you can build a 5,000, 10,000 order a day business on your website in various spaces. And so maybe the distraction factor of channels, while it's very tempting to be in more places, I remember like there were so many marketplaces available. Every quarter, my wife, who was our COO, would delist us from 10 marketplaces, saying they did less than 5 orders this quarter, we are delisting. So it's a complete like distraction factor for us, right? So I think managing all of these things are definitely challenges. They're good problems to have, but I think razor sharp focus is also important.
Harsh, from your perspective, questions a founder should ask themselves, when they're looking to scale.
I think one of the most important questions is that, is this a steady state growth business that I kind of have, or is this a truly hyper growth scalable business? And even when they're thinking of capital, right? Like Shan said earlier, touched upon this, but I think it's a very important question. A lot of businesses are great businesses, profitable, can grow at 25, 35%, etc. Will and might actually break if, they try to grow at hyper growth, right? They try to fund that kind of growth. So I think that's the first question. The second question truly is what channel of growth am I going to actually prioritize and at what stage, right? Am I going to chase marketplace specific growth? Am I going to chase D2C specific growth? Is offline the right avenue for me? Within offline, do I want to do a Coco kind of a play? Do I want to do a Fofo kind of a play? But those are, I think, very important questions. And third, like as I scale, like if I'm making a new entry into a channel or if I'm doing a product extension, does my team today have the capability around that, right? If my team doesn't have the capability to do that, then like my suggestion, really don't do it, right? Because eventually if it doesn't work, then it's a waste of time, effort and money.
So Divya, it has been challenging for many businesses, to get funding over the past year or so. How have you seen businesses, navigate through this successfully, especially as they're looking to scale up?
Sure. So since I come from the venture debt space, as you rightly said, I mean, the last 12 odd months, we did see the funding winter, and we did see a lot of consumer-focused companies augmenting venture debt, and that's largely on account of the fact that venture debt does help you extend runway till your next equity round happens, so that you get the desired valuation once you reach a certain revenue scale. So we've seen a lot of momentum with respect to venture debt. And also, vis-a-vis equity, it is far more prudent to take in some amount of debt or venture debt for your working capital needs. So in that way, we have seen a lot of traction in this particular space. Inherently, we do see that D2C companies are the ones who do have very high gross margins, right? So that's something we've seen across different sub-segments in this particular space, and that's the reason why we're quite excited here as well. How well do they manage their working capital? That's, of course, crucial, so that you don't end up locking a lot of capital there. For that, it's important that you do demand forecasting properly, so that you know how much inventory a company needs to have at any point in time. So those are aspects you need to work on, so that capital is not unnecessarily blocked in working capital. And of course, supply chain efficiencies, all of these are important, and companies who've been able to demonstrate that, so that they've been at least CM2 positive. We've been funding a lot of these companies in this space. So managing working capital, managing their supply chain efficiencies, these are things that companies have sort of taken care of, so that the burn is not very high. And these are the companies that we have partnered over the last 12 odd months. Yeah.
Prayag, so, obviously tech is playing more and more of a role, given the way technology trends are going. Love to hear your thoughts on how these technology trends are being used successfully by startups to, scale in this industry.
Sure. So, at least what we've seen over the last 10 years, let's say, for any brand per se, I think a lot of the technology earlier they had to develop in-house. Simple things like a WMS system, an OMS system, a multi-channel fulfillment system. Now, a lot of those products, infrastructure is actually available off the shelf. You don't need to build it in-house, whether you're building a marketplace business or you're building, a brand business. I think that's been the one big change, where you don't need to start from a scratch, and there are a lot of products available off the shelf. Again, there are new technologies coming, like around AI and all, which is AI, ML and all, where we see brands developing their in-house. So the tech they are investing is at a much higher level now. They are investing in building, let's say, consumer inciting tools, leveraging some of these new technologies like AI, ML and all. I think that's a better utilization of their time as compared to building basic tech just for business as usual. So that's typically what we are seeing across segments, where they are investing in actually high-end tech, and for something which is far more, I would say, valuable as compared to just running the mill.
So I see there's a 2-minute timer there. So let me ask just one rapid question. Prayag, we'll start with you. Any advice, do or don't, to a startup who's now looking to scale up and look for funding to go to scaling up?
Yeah, I think obviously, I think Divya spoke about it. I think the funding environment has obviously changed in the last 12 to 18 months. There's a lot more focus on profitability. It's not any more growth at any cost. So I think, and what we've seen, so there is capital available in the market. It's not like people are sitting on a lot of dry powder, but also what people are looking for is the right shape of the P&L. It has to be a business where, you have to show that the PMF is in place in terms of even the kind of, the unit economics and all have to look right, that you are doubling down, but it's being built in a sustainable manner. So, and that's been our experience. Like several of our portfolio companies have raised capital in the last 1 year. All of them, have worked on basically moving the business to a CM positive territory, where there is a clear path, either it's already getting to EBITDA positive, a clear path to EBITDA positive as they scale, and they have managed to raise capital. So it's not like, so capital is available. It is available for well-run businesses which are growing in a sustainable manner.
Arjun?
Yeah, I think exactly what Prayag said. And if you see the conversations on LinkedIn, if you see the conversations on public platforms, it's all about this. And I would summarize it in 2 words: grow responsibly. But I think the other thing that I would like to add also is that we are in a place now where there are more consumers, there are also more brands. So think deeply about where you stand as compared to what's around and where your white space is, because finding this white space or this differentiator or this right to win or reason to be will be very important for the success of your business in the long term.
Harsh?
Raising capital won't solve your problem, so please focus on unit economics. Because then you'll end up most likely throwing money at the problem that doesn't solve anything. I think that's very important in today's environment. And second, that's on scaling up, right? Second, I think it's a great time to start up, right? Like historically, cycles have shown, right? Like the funding winters are incredible times to start up. So if folks out there are on the edge, I would actually encourage them to start up.
Divya?
I think I would just end up summarizing what all of them said. Yeah, know what is your product differentiation vis-a-vis your peers. Focus on profitability as you scale as well. I think those are 2 key themes.
Any time for audience questions? I guess we can take one. There you go. I guess the panelists had such good advice. I think people are still absorbing it. Well, thank you so much, everybody. I think thanks for all your input.